Ripple has reportedly pulled off one of the most jaw-dropping moves in the crypto world, an alleged burn of a massive 40 billion XRP tokens. If this turns out to be true, it could dramatically reshape not only the future of XRP, but also send shockwaves through the entire digital currency market. In this deep dive, we'll explore what this burn really means, what evidence is backing it, and why some experts are now predicting that XRP could reach an unbelievable $20,000 per coin. Whether you've held XRP for years or are just beginning to follow its journey, this could be the turning point you've been waiting for. To understand the gravity of this, let's first unpack what an escrow burn is. Simply put, it's a method of permanently destroying tokens, taking them out of circulation for good. Ripple had created an escrow system years ago to prevent dumping too many tokens on the market at once. This system allowed a set amount of XRP to be released each month, but only the portion Ripple planned to use was actually circulated. The rest was locked back into escrow, keeping the supply in check and helping stabilize the token's price. But now, if Ripple has gone ahead and burned 40 billion of these tokens, it signals a bold shift toward artificially increasing scarcity to boost value. By burning tokens, Ripple is reducing the overall number of XRP available in the market. And in crypto, just like any market, if supply drops while demand stays steady or climbs, prices often surge. This isn't just a theory either. Reports suggest that an insider within Ripple's developer circle leaked documents showing a plan to aggressively slash the supply, possibly reducing the total circulating XRP by up to 80%. These aren't just random rumors. There are actual documents being cited as evidence of this planned burn, suggesting that Ripple is taking an active role in creating a supply shock. Even more compelling, data from blockchain analytics firm Sentiment shows billions of XRP being moved into burn wallets, special wallets that cannot send or transfer tokens ever again. Once XRP lands there, it's gone for good. These transactions offer some of the strongest proof that Ripple is serious about tightening XRP's supply. If this continues, the total XRP available to the market shrinks dramatically, which could send the price soaring as scarcity intensifies. Now let's talk numbers. XRP has a hard cap of 100 billion tokens. If 40 billion are indeed gone, that's nearly 40% of the entire supply wiped out. That's no small reduction. It's a game-changing cut that could ripple across the crypto landscape. Fewer tokens in circulation typically mean higher prices, especially when investor interest and institutional adoption are growing. If demand continues to rise while the available supply shrinks, XRP could enter a new era of value and influence in the financial world. Here's the simple rule of economics. When supply drops sharply and demand stays steady or rises, prices tend to jump. That's the basic principle at work here. This is exactly why so many crypto analysts and financial experts are now eyeing a massive $20,000 target for XRP. It may sound extreme, but this figure is rooted in economic fundamentals, not just wild guesswork. The logic is straightforward. Reduced supply paired with growing interest leads to higher value. It's basic market math, not just hype. To put things into perspective, XRP is still trading for less than $1. If billions of tokens are suddenly removed from circulation, and if institutional use keeps expanding, we could see a dramatic price shift. That kind of scarcity combined with demand has the power to drive market capitalization into the hundreds of billions, maybe even trillions. Just months ago, this scenario may have seemed like fantasy. But with these newly leaked developments, the idea is suddenly more believable than ever. And there's another layer to this story. Ripple's recent actions seem to fit a much larger strategy. They're not just reacting, they're building. For years, Ripple has been quietly securing deals with banks, financial services companies, and even government agencies. Their goal? To make XRP the go-to solution for fast and efficient global payments. The rumored escrow burn could be a powerful way of showing confidence in XRP's long-term value. By tightening the supply, Ripple may be sending a message: this asset is meant to last, and it's only getting more valuable. Timing, of course, is everything. Right now, the crypto space is in a rare moment where regulation, innovation, and investor interest are all aligning. Not long ago, Ripple scored a major legal win against the SEC, wiping away a lot of the legal doubt that had been holding XRP back. That win didn't just clear the air, it set the stage for major moves like a supply burn to carry even more weight. With fewer legal hurdles and a shrinking supply, XRP might be heading into its most promising chapter yet. So what should investors take from all this? For many, this leaked news about the escrow burn is a wake-up call. If these tokens are truly being burned and the market hasn't fully priced that in yet, getting in early could be a rare opportunity. While no investment is guaranteed, the conditions for a major XRP breakout are starting to come together, and those paying attention might be in the best position to benefit. Once the market fully processes this news, we could witness a swift price surge. As fresh investors jump in, that momentum alone could fuel even more demand, pushing prices higher in a self-reinforcing cycle. But as with any investment decision, it's crucial to do your own research. Crypto markets are known for being unpredictable and can swing wildly in either direction, so understanding the risks is just as important as recognizing the opportunity. It's also smart to look at the bigger picture. XRP's burn is happening in a broader context where major cryptocurrencies like Bitcoin and Ethereum are also dealing with their own supply and demand pressures. What makes Ripple's move different is how intentional and aggressive it seems. By deliberately creating scarcity, Ripple may be positioning XRP as a standout in the world of digital finance, especially for international payments. With central banks testing their own digital currencies and Ripple's platform being explored for CBDC cross-border use, XRP's real-world value could be about to rise in a big way. What's even more interesting is that this burn may only be the beginning. Leaked reports and blockchain activity suggest that Ripple could continue this strategy over time, gradually removing more XRP from circulation. This kind of slow, steady approach to reducing supply could trigger several price hikes in the future. For long-term investors, this could mean consistent value growth and increased confidence in XRP as a reliable store of wealth, potentially even rivaling traditional assets. Another important aspect to consider is how this type of news affects investor behavior. When people hear that such a massive number of tokens have been burned, it can spark FOMO, the fear of missing out. That fear often pushes more people to buy quickly, which can drive short-term prices up even faster. Early movers and experienced traders who pay attention to these developments before they hit the headlines could see major gains before the rest of the market catches up. All things considered, the leaked details about Ripple possibly burning 40 billion XRP tokens might be one of the most game-changing moments in the company's journey so far. If these reports hold true, XRP could be entering a powerful new phase, one that could reshape its place in the future of global finance. Ripple's decision to drastically cut down the number of XRP tokens in circulation could be the spark that sets off a massive supply shock, one that sends prices soaring to $20,000 or even higher. With recent legal wins, rising adoption from financial institutions, and a carefully planned strategy to reduce supply, the setup for a major bullish breakout is hard to ignore. For XRP investors, this combination